In the meantime, Wall Street stocks look set for a higher open on Tuesday as traders pick up bargains after last week's sell-off and as the countdown to the Jackson Hole meeting of central bankers takes on. Futures for the Dow Jones Industrial Average gained 0.13% to 21,721, while those for the S&P 500 index added 0.11% to 2,430.5. Futures for the Nasdaq 100 index put on 0.32% to 5,813.25, while both the Dow average and the S&P eked out slight gains in thin trade on Monday, following a flight out of perceived risky assets such as stocks last week. The stock markets were broadly high across Asia on Tuesday, with Singapore snapping a 5-session losing streak. Korea's Kospi rose 0.4%, while Hong Kong's Hang Seng gained 0.9%. In Japan, the Nikkei stock average fell 0.1%. It has fallen in 10 of the past 12 trading sessions to cut the year-to-date gain to 1.4%. Meanwhile, the Shanghai Composite Index rose 0.1%, while the Shenzhen benchmark fell 0.4%. Let's take a breather from those numbers now. China's Ministry of Commerce has described the trade investigation launched by the United States against China as irresponsible and not objective. The ministry made the remarks after U.S. trade representative formally initiated an investigation into China's intellectual property practices under a rarely used trade law, despite worries about its potential harm to China-U.S. trade ties. Section 301, once heavily used in the 1980s and the early 1990s, allows the United States to unilaterally impose tariffs or rather trade restrictions on foreign countries, but the U.S. has rarely used the outdated trade tool since the World Trade Organization came into being in 1995. They also call for the United States to make joint efforts with China to promote economic cooperation under the one-year plan and to strive for bigger results. Oil prices are higher today on indications that the United States supply is slowly tightening. Brent crude futures were at $51.83 per barrel in early trade. U.S. crude futures were at $47.53 a barrel, up 16 cents. U.S. commercial crude inventories have fallen by almost 13% from their March peaks to 466.5 million barrels. Although U.S. crude production has broken through 9.5 million barrels per day, it's at the highest since July 2015. Analysts fear growth may slow down as U.S. energy firms are cutting the amount of rigs drilling for new oil. Now back here in Nigeria, the central bank has boosted the foreign exchange market with some $195 million in the three segments of the market. At the interbank wholesale section, the bank auctioned $100 million, while an intervention of $50 million was carried out at the SMEs and Invincible segments. On the other hand, the invisible markets received $45 million. Well, these latest interventions are coming on the heels of a previous series where a total of $364 million were allocated to the retail and wholesale market. Well, we'll be talking much more about the crude oil market and Nigeria's FX market on the show later with an analyst from the financial derivatives company. But before then, analysts at the United Capital have reported that President Buhari's return to the country after 104 days of medical leave is expected to elicit neutral reaction from investors. The researchers referenced the peak in investors' optimism during the president's absence, but knows that his capacity to build on recent gains will determine the pace of subsequent economic activities. In President Buhari's absence, Nigeria's national unity and insecurity became a major concern to investors, and that's a major area United Capital expect the president to address in the immediate term. Meanwhile, in line with the federal government's effort to improve agriculture in Nigeria and reduce reliance on oil, some Nigerian investors are developing the first agricultural commodities exchange in Africa's most populous country. The exchange will be called Integrated Produce City Limited, which will have storage facilities, including refrigerated warehouses and host processing plants on its 100-hectare site located near the southern city of Benin, the Edo State capital. The company has put up 20% of the required $135 million and is in talks with lenders and investors from South Africa, China, and Australia for additional capital. Nigeria is boosting investment in agriculture to increase exports and cut food imports that costed $3 billion in 2015, according to the National Bureau of Statistics. Away from Nigeria now, the Nairobi Securities Exchange has declared a lower half-year profit before tax of 99 million Kenyan shillings from 106 million Kenyan shillings during the same period last year. Total income for the period is 346 million shillings. The CEO of the Nairobi Securities Exchange, Mr. Geoffrey Odundo, is assuring investors that the NSE is strengthening the team to deliver shareholder value. Mr. Odundo, who was analyzing the NSE's half-year results, maintains that it has a very robust investment policy and is currently the only company with zero debt. And Africa's biggest grocer, ShopRite, has reported a 12% rise in annual profit as consumers battling recession and job losses turn to its non-frills outlets. Diluted headline earnings per share totaled 1,007 cents in the year ended June, not far from a 1,002 cents estimate. Headline earnings per share, the most widely watched profit gauge in South Africa, strips out certain one-off items. Sales rose 8.4% to 141 billion rand. The development earnings are the first to be reported by ShopRite since fellow retailer Steinhoff agreed to buy a 22.7% stake as part of a planned listing of its African assets, including clothing chain Pep. In the meantime, South Africa-based energy company Sasol has released a report saying that there could be a potential tax exposure of 11.6 billion rand for the periods of 2013 to 2014 on varying tax principles. The company has disclosed several disputes with the South African Revenue Service, which relate to the international procurement of crude oil by Sasol Oil between 2005 and 2012. The matters are being taken to the tax court, and things are not in Sasol's favor. In June, the court ruled in favor of SARS for procurement in the 2005 to 2007 tax years. However, in August, the court granted Sasol Oil its application for leave to appeal to the Supreme Court of Appeal. Business Incorporated returns in a moment. Please stay with us.